What's going on, everybody? Happy New Year. It is January 1st, 2025. And so we are back. I got both the guys here, believe it or not. Tillman, he's just going to grace us with his presence. You know, he's in the middle of doing family stuff. But, man, he's going to show up anyway. So hopefully you guys are excited to be here. Before we get going, as always, hit the thumbs up, hit the like, hit the subscribe. Follow us. You can follow us. Our ats are under the video here. I'm TexasWest Capital. Andrew, which you'll be seeing in a minute here, is AP_Abacus. And Tillman, of course, at Texas OL61. And he's always so proud of me these days when I get that correct. So let me kind of pull up these guys here. There's Andrew. There's Tillman. What's going on, gentlemen? Happy New Year.
Happy New Year, man. Happy New Year.
I love that Tillman muted himself and then tried to talk. I'm just going to blame that on you, Andrew.
I think it automatically mutes me, but yeah, Happy New Year, everybody. Texas is about to play in about an hour, so strap in, get your snacks.
There you go. There you go. That's right. But until then, we've got Bitcoin, right? And what a year. What a year it's been. Bitcoin up well over 100% for the year, in spite of, you know, the 7 months of sideways, 8 months of sideways, where everybody was thinking that it, was the top there. And then boom, what did we do? We popped right back up, right? You know, we popped up almost, we popped up over 50% from the pullback low there at 49,000. We hit like 108,000. And since then, we've just been doing the kind of sideways thing. But more importantly, I think, are the things that we continue to talk about here, because we're not here just talking about price, Bitcoin for its price sake. We're here talking about Bitcoin being this thing, right? This thing that goes in and transforms kind of what we're doing with the whole financial system and maybe nation states and whatnot. And so to that tune, we have the ETFs, which of course, what is it? Well over what? Well, it was over 50 billion, wasn't it, Andrew?
No, that's just BlackRock's ETF.
That was just BlackRock. Okay.
Just BlackRock.
Yeah, BlackRock owns as much as Satoshi does now, or more.
Yeah, it is. BlackRock announced themselves in the last 2 weeks of 2024 that they had gone over 50 billion in AUM in that ETF, and also Bloomberg put out a small piece that BlackRock's Bitcoin ETF is the fastest and most successful and quickest growing ETF in the history of ETFs to get to 50 billion. Like, nobody's ever come close to getting to 50 billion that fast. And, we talk about the size and scale of the overall Bitcoin ETF, asset class as being plus 100 billion, probably closer to 120 billion at this point. And people can talk about, well, what are actual net inflows versus what was already in there. But a reminder that BlackRock didn't start with 20 billion inside of their ETF like Grayscale did. They started with zero. They started from scratch, and in 11 months, put a 50 burger on the scoreboard.
I think we're just warming up. I mean, to be honest with you, the most exciting thing that I've been hearing about, I've been sick for 2 weeks. It's been brutal, but I've been, keeping up on all the news. And one of the things that has really gotten me pumped is I do believe that based upon all the interviews I've watched, that Trump wants a strategic national Bitcoin reserve. And if Trump wants it, I have a hard time believing he's not going to get it. I think he's got bipartisan support in both House and Senate. And I think that you're going to see, if that's implemented, you're going to see a rush to the door from the biggest boys out there, nation states, right? To try to front run that and get ahead of it and at least acquire some before, I've heard numbers upwards of maybe they don't buy 1 million in 4 years. Maybe they buy 500,000, maybe they buy 250,000. It doesn't really matter at this point. If they buy one, it's going to cause, in my opinion, a pretty good pump. And if you then take it one step back, let's just say that's pie in the sky to you and you think that that's not going to happen. Well, look at the states that are coming out and saying, we're going to add it. You're not going to stop that. There's going to be a handful at the very minimum. And if I had to guess, it's going to be a race to get some strategic Bitcoin reserve in your state pension or somehow have exposure to it. And if we're talking about, $50 billion being a lot of money in that conversation, it's a joke. I mean, 50 billion could be, a blip on the radar a year from now if you see the race to the door like we could.
Yeah, and Scaramucci even just recently said, we said this stuff gets horse traded, so you'll probably have 200,000 Bitcoin won't get sold. Talking about what we were talking about prior to the show here, what we're kind of already holding, right?
Yeah.
He said, and they'll probably buy another 400 or 500,000 Bitcoin over the next whatever time frame. And so, I don't know, minus his politics. I'm not a big fan of Scaramucci's politics, but he does have connections, there with
a reminder that Scaramucci's Skybridge Capital were the initial seed funders of BlackRock's ETF.
Yeah.
So they put in whatever it was, 10 million or 30 million or whatever the number was, to be the principal seed funders of BlackRock's Bitcoin ETF back in July of 2023.
Yeah.
So I've had when I talk about people that I have conversations with that are either at BlackRock or adjacent to BlackRock, not to give anything away, but it's oftentimes Scaramucci and then a couple folks that work at his firm. I had a short conversation via Twitter DMs yesterday, and they just remain remarkably bullish on the continued up and to the right, almost parabolic interest in Bitcoin as an asset in 2025, meaning that the inflows will probably accelerate in the first couple of quarters. They talked about the fact that the Bitcoin strategic reserve will happen even if it's a Bitcoin strategic reserve light, meaning that even if all they do functionally is remove the idea that they're ever going to sell Bitcoin ever again, right? Like right now, it's seen as not a quality asset. It's seen as ill-gotten gains that needs to be removed. That's how.
Let's dissect that for a second, because I don't think it's just as clean cut as that. I think the question that these nation states and states in the union have to ask themselves is, how do they want to hold Bitcoin? The federal government has to ask themselves the same question. And I would venture to guess, just like I have said for a very long time now, that self-custody is not going to be the way that they choose. I think the ETFs are going to see this volume. I think the ETFs are going to be the ones that get the benefit of it. And I think Bitcoin, as a self-custody mechanism, I don't think that exists, to be honest with you, beyond, maybe the federal government, but I don't see a state risking their pension fund in any amount on the back of some person's, trust on their seed phrase, or I just don't see it happening. So, custody is the big question. And, I think the ETFs have answered it in spades. We just haven't seen the institutions pile in, or the nation states pile in quite yet, because it's brand new. It all happened this year.
Yeah,
well, that's a really in the moment important point. And the reason why it's important is just a week and a half ago, we saw Hester Pierce come out and talk about the fact that we could very quickly in 2025 move from cash create on the Bitcoin ETF side to in-kind distributions. We talked about that here on this podcast maybe 6 months ago, that in reality, if things go the way that we thought the election would, there's going to be some seismic shifts that are going to matter. People may not understand them in a very meaningful way, but going to in-kind distributions versus cash create is a massive, massive, massive deal. And if she's talking about it, and she sits as one of the SEC folks that matter and makes decisions on it. Now she's at some point going away when her term is done, but at the same time, she's privy to those conversations. She's privy to being somebody that has meaningful discussions with the issuers themselves. The SEC is their regulator. Okay. So If that's what's coming from her, then it's more than a whisper and a hope. It's something that's being considered, and probably, let's make sure we have a little architecture around this if it actually happens. So that, coupled with, the conversations and some of the quotes from yesterday, there's an expectation that we push beyond 150K in 2025, if for no other reason than the scale of continued inflows into the Bitcoin ETF. So, we've got some real sunshine ahead of us in 2025.
Yeah, which seems to be contrary to what, if anybody hangs around on social media for any period of time, it's the end of the world, and oh my God, look, stocks are pulling back. So they're not even saying stocks are pulling back. It's the very emotional, it's the end, stocks are going to nuke, it's, whatnot.
I think I said this months ago, but institutional rocket ships are fueled with retail tears. They have to make the pain. There's no other option. There's a finite supply, no different than when you're dealing with, stock certificates. There's at this moment, there's a finite supply of Bitcoin. Now, will there be more produced? Yes, there will. But you can't just out of thin air meet the demand where it is. You have to artificially create the supply through pain, through inflicting pain on the market, which is volatility, right?
Yeah. And I mean, man, so when we look at that, we go, okay, well, here's the pullback, and you see that, a great swath of your retail participants are fearful, and they all start selling off, providing opportunity for those that have cash, which again is usually going to be your big players and whatnot, and this is just a cycle that repeats. I mean, and it seems like, guys, maybe I'm just feeling a little different, but it seems like this bull cycle, the last couple of years, there has been a lot more freaking out about the top being in than what there's been in any other cycle. It seems like it's been constant for 2 years now, every other month or every month.
Well, I think it's because we've gone into some really difficult psychological territory. When the price hits 100K a Bitcoin, that's hard on retail. That causes them to freak out, and it causes them to start wondering, can this go back down to 50? I don't want to lose half my money. Whereas, if you're sitting on a bunch of cash like Microsoft, you don't care. You have so much cash, you're ready to buy whenever you have the conviction or the appropriate amount of conviction. And I just think that retail, this is not a bull market fueled by retail. And that is something that I don't think we could have said throughout the course of the last 15 years. I think every bull market, if you look at it, I'll point out a key statistic that you can follow. And we've said this before on the show, Bitcoin dominance levels. Do you really believe that the amount of alt season that we've seen in the past, we're going to see again here in the future? I don't believe we are, because I don't think a lot of the Bitcoin buyers care about the alts. I think they're here for the reasons what we've been talking about. They're here for the institutional side and really for the, anti-inflationary properties.
Well, it should be noted, and it's rare for me to pat Tillman on the back like this because it's uncomfortable for me. I don't enjoy it at all. But I will say that, he put out a post, maybe, I don't know, 45 days ago, 60 days ago, whatever, when Bitcoin was racing. And, he said, listen, price discovery is pretty amazing stuff. But I think we get to about 106 is probably, I think we were in the 80s at the time. It's like, I think we get to about 106 and we probably pulled back into the 90s. He was dead on. I mean, he missed it by 1.5% basically, because it went to 1.
Well, that wasn't, I'm a technical guy. I like looking at charts and stuff like you do, Chris, but that was purely on the fact that retail mentality at 100K is a rough one. And it doesn't mean they have to push it a little bit past that, right, to sweep the liquidity, but it's gonna be a hard one for people to swallow. But I also think that that's why the ETFs are even more important than we're even talking about, because why? They're not priced in price of Bitcoin. You can buy as small denominations. You can stack them in a number of different ways than you can if you're trying to do it on chain. So it's going to be interesting when we see that physical Bitcoin detach from the ETF price to some degree, because I still think it's coming.
Well, I think that's an important point you just made there about, the fact that when you go, so if we're out here buying Bitcoin, we're always thinking in terms of whole Bitcoins, right? We're not thinking in terms of Satoshis. But when we go to the ETFs, we think what? In terms of how many shares you have, right? And so I think if you're looking to buy Bitcoin and you buy through an ETF, I think it probably makes you feel better from an emotional standpoint, because you can feel like, oh, I've got 100 shares, 1,000 shares, 100,000 shares, whatever you have, which, adds up to how much of one Bitcoin. Whereas if you're buying in Bitcoin, you're like, well, God, I got like 1/10 of a Bitcoin. And you feel like a loser, right? Either you shouldn't, but you do.
We should probably talk.
It makes you feel like it's not worth it, but it's not. It's really, I think, again, we've talked about it a lot. Most people up until this point have gotten into Bitcoin for the gains. I don't think we're seeing the volume attached to chasing gains anymore. I see the volume attached to hedging. It's a hedging tool now, as much as anything. Hedging against your cash position, hedging against your equity position, hedging against the U.S. dollars position globally. Like, there's just too many useful mechanisms that exist for you to give you an excuse to own Bitcoin, especially if you're of a high net worth and or institutional. And it has nothing to do with chasing 50% returns in a year. I can tell you that. So
it's we should probably talk about what's come out about New York DIG and what they've got going on associated with some insurance connected to Bitcoin, which goes back to what we've been talking about for 6 months here on this podcast, that in 2025 there's going to be product suites that are built around Bitcoin and Bitcoin returns like crazy, like absolute crazy. And this is, one of those issues. So Chris, if you want to walk through that real quick.
Yeah, actually,
one more thing before you say this, I just was going to give some kudos to, you can look at the publicly traded companies, MicroStrategies, all the ones that we've, been hearing about and how they're using it for leverage. But there's a ton of private companies, big companies, Grant Cardone, right? He's doing with his brother this real estate fund that's backed with Bitcoin. It's a real estate / Bitcoin fund. How many more projects are going on like that we don't know about because they're in the private sector? And if they play out the way that MicroStrategies played out, it'll change the game forever.
No, exactly. And that's a great point. That's Grant Cardone's new what is that? Buying a property. Basically, he's into real estate, multifamily properties, and it has to do with the multifamily property fund, which includes I think it's with the Bitcoin coming. I haven't studied it fully, but you get the Bitcoin yield or something in it that kind of increases your overall return. And then it's just, it's a pretty great idea. It's pretty amazing. And he got that because, his brother Gary's been on him for a while now, about get Bitcoin. And he finally, they both went and visited with Michael Saylor. And it was after that trip that Grant finally put that together. So, it was a matter of time. Like we always say out here, you get Bitcoin at the price you deserve, whatever that happens to be. But so I wanted to kind of mention this real quick because we've been talking about, again, as Andrew was saying, this idea that, as Bitcoin becomes more and more integrated into the financial system, we're going to see a lot more of the TradFi suite of products that we see with everything else coming into it, with Bitcoin being kind of that base layer, being kind of that thing that drives it. And so to that effect, Stone Ridge has a subsidiary called NYDIG, so New York DIG there, and they are a Bitcoin-backed lender. is what they do. And so the big problem, as we've discussed previously, is that the problem with your Bitcoin lending today is that it's so expensive, right? It's so the interest rate you're going to pay is just ridiculous. And so we've talked about how what we see probably happening is that banks become, starting with BNY Mellon, start to custody Bitcoin, and by them holding the Bitcoin, not even just custody, but these point where they're like, hey, listen, we have these products, you've got to put your Bitcoin in here, but then you'll get access to these loan products and whatnot. So what's going on with New York Dig here is that they want to they're looking at actually adding what's called insurance float into their Bitcoin backed loans. Now, insurance float is something that, for instance, Warren Buffett uses a lot because it creates a lot of liquidity that you can then use to go and buy more. And so basically it comes from the insurance realm. And so when the insurance company receives those premiums, but they haven't paid out the claims, that's money just sitting there. And so they use that money then as a way to create revenue for the insurance company, because they can invest that float, that money that's been paid in but hasn't been paid out yet, to earn interest, increase profits, something like, those types of things. And so it's the same idea with what New York Dig is looking to do here. And they say that you'll be able to get Bitcoin-backed loans through them, maybe like at 9%, which maybe still seems kind of like high, but it's nowhere near 20, 30% that we've been paying, years previous. So we're kind of getting step by step closer to that point where, again, the big banks kind of custody Bitcoin, hold Bitcoin, they have the Bitcoin, and then they can, create these products that we can use similar to this. Again, we talk about mortgages with backed by Bitcoin and a whole bunch of different stuff. So, I mean, I saw this and I was like, hey, man, that's kind of cool that they're coming out with this. It's not that it's the game changer is going to happen tomorrow, but it is that prelude, I think, into what's coming.
Well, just Berkshire alone and Warren Buffett, they're closing in on almost $200 billion of insurance float inside of their own companies, right? So we're talking about hundreds and hundreds of billions of dollars in that particular market, if not trillions, right? Because, by the way, there are a lot more insurance companies other than what Warren Buffett handles. So this is exactly the kind of thing that we thought and said would be happening throughout this year, is that you're going to see Bitcoin move its way into additional areas of finance that are just when Bitcoin finally found itself on the lips of Larry Fink and then on the balance sheet, so to speak, of BlackRock, it's only a matter of time until there's all manner of products just swimming around in Bitcoin liquidity pools. So,
well, having an insurance company, I know a lot about this because I've written a captive policy before, and it all goes back to inflationary risk, right? Insurance companies are required by law to keep a certain amount of cash against their liabilities readily available for claims. That's what gets you to be called an insurance company. So if you're sitting there being forced to hold cash and you have inflationary risk of X percent, you have to, by definition, find competitive advantages to place that cash to get the appropriate yield according to how long you've held the asset. But it has to be highly liquid, because if a claim comes in, you have to be able to immediately convert that to cash and pay the claims. And Bitcoin has properties attached to it that no other asset class does, that allow them to diversify into a potentially high income earning or high cash yield product like Bitcoin, but still have the immediate liquidity that they have to have based upon the law.
Yeah, and we've proven that time and time again. There's been huge sell-offs of Bitcoin that haven't moved the needle much. And that's, it's exactly what you need, if you're going to be in that situation. Exactly.
Well, one can make the case that there isn't a more liquid asset on the planet than Bitcoin. It never turns off. It's 24/7, 365, right? So if you've got a quote unquote, as Tillman just described, on a Saturday night, right? Bitcoin is a pretty great way to handle that particular transaction. Whereas, again, in the traditional markets, not only would you have to wait till Monday, but you're now looking at best T+1 associated with any transaction, right? So you're
well, in this brings back the issue of the difference between.
He may pop in and out. He's flying through the mountains of Colorado there. But I want to make sure that we get him back in because, again, he's got some unique insight from an insurance standpoint. Go ahead, Phil, get back.
Oh, maybe not.
Maybe not.
More clear. Can you guys not hear me?
We got you now. You're back.
Can you hear me?
Yeah, we got you.
Okay, yeah, forgive me. There'll be a little bit. This is the only sketchy spot, but this point that you're driving home about on-demand liquidity, right, and how you, as an institution or a nation state, capture that. I think we're going to have to see ETFs traded 24/7, 365 in the very near future. I can almost guarantee that some market out there will be the one to claim that prize and say, you want to trade ETFs? You can trade them 24/7, 365. It's the same as Bitcoin, but a different set of rails. And then you have as close to a mirror of the asset, quote, Bitcoin that we all love, but you also have the custody issue taken care of. So I would venture to guess, I don't know how long it's going to take. I can't imagine it taking that long because it's critically important to the infrastructure of Bitcoin. One of the things we love about Bitcoin is what Andrew just said. Saturday night, you can send it anywhere, you can receive it, you can do it. But you can't do that with the ETFs. And so why wouldn't you be able to do that with the ETFs? There's nothing stopping it, right? Except regulation and policy, right? And I would venture to guess that this year we will see Bitcoin ETF marketplaces open where you can buy and sell them 24/7, 365.
Yeah, the technology is there, right? So, as an example, how hard is it to co-opt the technology associated with a place like Polymarket, right? So, Polymarket still and does exist from a totality of liquidity as well as being able to transact 24/7 at a place like that. I mean, who's to say you just don't co-opt the tech and fire up
there's
the
one in Texas that they're.
Yeah,
when does the exchange in Texas go live? Do you guys know?
I don't know. We'd have to look at that, but I know they're certainly building it. It's just a question of when, not if.
Yeah, I was just about to bring that up when we started talking about 24/7. The ETFs then, because we know that exchange that they're trying to open there in Dallas is going to be a 24/7 exchange, and so then I think we see the ETFs kind of move to that. In that area, either that or the other ones have to go, have to become 24/7 themselves.
I mean, it's going to be, we're going to see some pretty significant, evolution of finance over the next, let's call it 24 months. That's my guess. Over the next 24 months, we'll see, really, we're fairly close on 24-hour trading, like in the futures markets, for example. The futures markets, they shut off for about 18 hours a week.
Yeah.
And so, again, you have some infrastructure there. It's just a question of how broad do you want that infrastructure to grow.
But again, to me, the futures market is very different than the Bitcoin market because you have the duality of rails, right? You have this paper rail that you can participate in, and then you have the physical Bitcoin proof of work rail that you can participate in. And I think you're right, Andrew. But I think there's going to be a driving emphasis on instant settlement, unlike we've ever seen before on the side of securities, right? And because Bitcoin,
remember,
that's the standard. Bitcoin fixes it, right?
Yeah, I think,
So my point is, if there's more liquidity in the 9 to 5 ETF market, BlackRock or someone will step up and change that. They will create liquidity in the overnight market, because Bitcoin as an ETF product can't function in the overnights like the futures do, because there's this other set of rails that you can immediately migrate to that are more efficient and more liquid, right? So they're going to have to inject the overnight Bitcoin ETF market with a ton of liquidity so that it's more attractive to use than the proof of work network, right?
Yeah, and well, in the last 24 months, again, in terms of market infrastructure, we went from T+3 to T+1, right? And they just did it for all intents and purposes with a stroke of a pen. They didn't, raise new buildings and create entirely new departments to go from T+3 to T+1. They just said, okay, that's what we're going to do. And so, again, this is nothing more than, is it needed? Is it wanted? And, are the regulators going to sign off? And we know without question that the regulatory environment that's about to show up in the next 20 days is it's hard to explain the differences between the current regulatory environment and the previous administration. I don't even have an analogy that works for it. It's so different. There's an expectation across Wall Street, listening to commentary, that not only will M&A come back, but, the actual idea of IPOs will return. I don't know if anybody's noticed, but there hasn't been a meaningful IPO in forever.
Right.
And there used to be IPOs darn near every day at the NYSE and the NASDAQ back in the late 90s and early 2000s. I mean, that was their business, frankly. Yeah. That's how they make money. And that particular market has completely dried up. Well, that switch could be flipped back on. And again, mergers and acquisitions be flipped back on, because, over the last 12 years, because there was only a 4-year period in there where it was kind of open again, but there was, previous years before Trump, it was very, very difficult. Yeah. Where if you're going to do a merger or acquisition of any kind, the question was, yes, we know the regulators are going to say no to this, but are we willing to fight it in court? That's the conversation we're having when we're going to potentially acquire a company or a competitor. That will go away immediately, January 20th or whatever it is.
Yeah. And I was trying to find some information on that, on the TSE, the Texas Stock Exchange there. Mm-hmm. Best thing I can find is about 3 weeks ago from Bloomberg, but nothing with a solid date of when they'll open. But it's supposed to be opening here in 2025, downtown Dallas, at least temporarily there to get it going. I got a question here. Says, curious if they're going to attempt to run the exchange on a blockchain. I don't know that information has been set out there. Yeah, I haven't seen anything about that yet.
They can't and they won't. That's going backwards. They've already taken the time to amass the liquidity needed to really take the lead. If you're comparing how much liquidity is on chain versus off chain right now, I would venture to guess that it's going to ever increase on the off-chain side and ever decrease on the on-chain side. Why? Convenience. Why? Risk, cost. There's too many driving factors, and so I cannot see the powers that be voluntarily giving up their power, through transparency. Transparency is great, except in real time. Yeah. Because in real time, transparency is risk, right? If you know exactly what I'm doing and you can just run on-chain analysis tools to find out who's buying and who's selling, that doesn't give them enough of a head start for the type of liquidity that they're moving around. They need a much bigger head start, and they need it to be quiet until they've accumulated what they're accumulating.
Yeah, traditional markets are going to turn into, on-chain meme coin 2.0. They'll avoid that like the plague, right? Like,
Yeah.
The price adjustments associated with meme coins are directly related to you're watching the transactions happen in real time, and you can manipulate them, frankly.
Yeah.
There's a fine line associated with traditional markets where there is a fairly high level of transparency, but that transparency is watched like a hawk associated with any level of manipulation. And certainly organizations like BlackRock and Citadel are no fools, right? They're not going to open an exchange and say, well, it's just willy-nilly. Everybody just come here and have a good time. Let's hope for the best. No,
Well, just look at the people who have tried to do this for the last 10 years, XRP, Ripple, right? How do you get on-demand liquidity through XRP? Well, isn't through the open market. They're cutting deals with banks and giving them huge chunks of liquidity, and then they're using their proprietary software, ODL, run at the bank level to provide that liquidity bank to bank. If their mission was ever to be even taken seriously from day one, that would have had to be a key feature. That no bank wants to show all their Nostro Vostro deposits and how much liquidity they're pushing overseas on any given day, right?
Yeah, and we forgot to warn everybody. This is the part of the show where we say things that a lot of people don't like, because it isn't the rah-rah. Everything is going exactly blockchain coming up here. But again, this is the reality, guys. It's not that blockchain, Bitcoin, whatever, are going to take over and replace. Things are being integrated into the overall financial system, which is much, much, much larger than these things. And so, and this is the point where we get in there. We go, okay, well, this will be in. This is probably not going to be in for the reasons mentioned.
I mean, the truth of the matter is that BlackRock and, for example, State Street, they're building things associated with different blockchains, right? They are doing those things right now, but those are beta programs where they're just playing in the sandbox and hoping that they find something that may be beneficial to them as an organization, and then they'll use it, right? They make plenty of money doing what it is that they do now, which, by the way, State Street is probably going to be the next significant GSIB that will be announced to be able to custody both Bitcoin and Ethereum in the same way that Bank of New York did. That'll probably come in early 2025. And oh, by the way, State Street, I think, custodies about $38 trillion worth of assets, and Bank of New York is like 43 trillion, right? So they're not in the business of necessarily disrupting their own existence, with on-chain, rails. And they're probably not going to do that. But at the same time, they'll do some sandbox stuff. They'll probably put out some things that will be, little pilot programs that people can play around on, in this new Texas deal. But they'll make incremental adjustments. We were at T+3 2 years ago. We're at T+1, and we'll probably go to, kind of on demand 24/7 with this new exchange. And we'll see where that goes, right? Now, 5 years from now, where will we be? Well, that'll be interesting. That'll be really interesting, but I don't know. I'm not Nostradamus here.
Real quick,
tell you where we'll be 5 years from now.
Oh, he's Nostradamus.
Exactly where we are now. Nothing changes. You just put different labels on it, and it's just liquidity, right? And again, big liquidity takes a lot of time to move, and it requires a lot of secrecy to move it without adverse effects. And so, is that going to change ever? No, it won't. Now, will the on-chain data provide supplementary data to us to analyze the markets with? Yes, but there will be an absolute lag time between when Bitcoin gets reported on chain and what's going on with paper Bitcoin off chain. There will be a lag because it has to happen, period, the end. So, paper Bitcoin, again, is going to rule the day at the end of it.
There are, whether it's 5 years or 10 years, there are cycles that exist in finance, right? So, there was a world where, paper money won the day. And then, there was a world where we could write checks. And then there was a world where we had debit cards. Debit cards, for all intents and purposes, brought on the digital age of money, right? Yeah. And then there was a world where you could pay with your phone. And then there was, so there are going to be continued adjustments. It's just a question of what do the guardrails and the railroads look like underneath all of that stuff. Technology is one thing, right? But are the guardrails meaningfully adjusted underneath that? I don't know. We'll see.
Well, it's the little things that most people don't even pay attention to that are really the drivers. Like if you look at the banking industry, what has initiated more loans than anything else in the history of banking? Overdraft protection. You may not think of it as a loan, but by God, it's a loan. Yep. It's a high interest loan that they get to hammer 90% of Americans with, because 90% of Americans are living paycheck to paycheck and bouncing checks and overdraft. In fact, you can look at 90% of the commercials that serve retail on the banking side of things, like Chime. What is their major differentiator? We'll give you $500 cash advance at the grocery store so you can buy your groceries. That's the exact same mechanisms that are going to come to Bitcoin. It's going to be a fee-based system. Convenience is going to cost you, and the more you move, the more money they make.
And then it's funny you bring that point up, because you look at like Chime and those others that like that. I've seen so many things online where people are like, I didn't know they were going to charge me 30% on this or whatever, because the commercials come out and make it seem like, I'm just going to have this money, it'll be easy. Well, okay, maybe it's easy, but they said they were going to be able to loan up to $500, but I don't, I don't get to that point where I'm allowed that much. I only get the $50.
Or it's a slight nuance that most people don't understand, like how Robinhood says that they don't charge you fees to trade. But then ask yourself, how do they make their money? If they're not charging you fees, what are they doing? Well, I can tell you, they're selling your order flow to people like Citadel, and that information equates to money. And it equates to a lot higher entry price or a worse fill price than any fee they could have ever charged you. And it's the same thing that they're building with why do we want a digital age? Why do we love on-chain? Well, because it's instant settlement. And when you do a lot of instant settlement and you're the bank, you make a lot of money in fees. That's what they're after. That's the whole game.
A really good example of how traditional financial institutions will be very, very hesitant to make meaningful adjustments to their current models is Fidelity and Bitcoin. So Fidelity was one of the earliest where you could buy spot Bitcoin at a traditional place, right? So you can buy spot Bitcoin now. Guess what you can't do with that spot Bitcoin position? You can sell it on Fidelity, sure, but you can't move it to another exchange that's Fidelity. You have to sell your Bitcoin position to move that money. You can't move it in time.
And I don't want to name any specific names, but to Andrew's point, every exchange that used to allow that doesn't allow that anymore. So it should tell you kind of the writing on the wall as to where they're going. You want to own Bitcoin? Great. Own it under the rules that our brand create for you. And we will be the ones that determine how competitive we are in that market and how eager we are to earn your business. That's the game. They've always played it that way, and that's the way they're going to continue playing.
But and Fidelity is as Bitcoin forward as any traditional financial institution on the planet, right? They've been mining Bitcoin since 2015 internally, right? So, but at the same time, they still have, there are ways that they make money, and they don't want to foster the free flow and easy flow of assets off of their platform, right? Moving Bitcoin on chain from one wallet to another, and that other wallet is a different exchange or a different entity than Fidelity. That's too easy of a move for them. They don't want that happening, so they don't allow it.
It's like those highways. I live in Colorado, so we have a lot of high fenced highways that have one-way gates. Animals, if they're stuck in between on the highway, they can get out very easily, but it's really hard to go the opposite way. Now, financial institutions have to play they have to dance a fine line on that, because the harder you make it to get your money out, the less trust you have in that institution. So, but the equation still remains the same. Create a little friction on the way out and no friction on the way in, and you accumulate assets very quickly, and you are able to, if you're properly regulated, you're able to leverage those assets into creation of more assets.
Well, I mean, and the meetings that happen at Fidelity to create particular policies like that, it's not just we're kind of restricting movement because we're not moving it on chain. The reality is the tax ramifications of selling your Bitcoin, if you've held it more than 1 year at Fidelity, are just as big a deterrent as anything else. Well, I'm not going to sell it because it's up 115% since I bought it. That's a huge tax issue that I got to deal with to move my money off of Fidelity. So forget it. I'm just going to hold Bitcoin anyways. So I'm certainly not going to incur a tax issue just to move my Bitcoin holdings to somewhere else. It is it's pretty ironclad position to take that works. Flat out works. I mean,
they're just using all the forces available to them to
correct.
create a little bit of friction on the way out, and no friction on the way in.
Well, think about it this way, right? So Grayscale, appropriately received the ire of huge swaths of shareholders because you couldn't sell your shares in 6-month blocks of time, right? You said you were locked in for 6 months. Well, this is a version of that, just light, right? It's just like Tillman said, using the rails and forces available to Fidelity to almost have the same policy. It's just legal and not frowned upon. But the way it plays out for individuals is nearly the same.
Yeah. And so, let's kind of move on a little bit here. That, we were talking about big banks earlier. Now we've got yesterday, New Year's Eve. Let me see, who was it here? It was over. It was the Swiss. The Swiss here. Let me see here. I want to say this correctly. If I can find that.
If I know you
won't,
but it's okay.
I won't. Oh, gee, thanks, man. Boy, I've missed that. Over the last 2 weeks. But anyway, so the Swiss Federal Chancellery on December 31st, so yesterday, what they did was they set in motion a proposal to constitutionally mandate that the Swiss National Bank, the SNB, holds Bitcoin on its balance sheet. But the proposal now, it has to accumulate 100,000 signatures for it to be put to a public referendum. So that's the thing that's coming out now. But man, oh man, I was talking with Andrew about this a little bit before the show here. And I mean, if that were to pass, that's big.
Whether it happens today or in the next month or 2 years from now, this stuff is going to happen. It's just going to happen. Because, governmental entities, they want to get their hands on this asset at scale. For no other reason than control reasons. And so, whether the United States does it, if the United States does a Bitcoin strategic reserve, just from a competitive standpoint, all of their allies and their adversaries are going to do it in the same way. So it's only a matter of time. It really is only a matter of time.
Well, and I think the game is already over. How much, we've been saying this for a long time, but I think recently there's been a lot of FUD being pushed out as it pertains to AI cracking SHA 256, right? I've been talking about this for over a year and a half, and it's an inevitability. You cannot stop technology from progressing. Moore's law, right? But what you can do is you can remove it from the current rails and use a new set of rails. Today, if SHA 256 was cracked, BlackRock wouldn't blink. They wouldn't blink about having Bitcoin on their balance sheet. They wouldn't blink about the ETFs. They wouldn't blink about any of it. Why? Because they don't need the proof of work network anymore. There's more lost than we have to gain. If we just shut it down and said, forget mining, and it just was relegated to kind of these mom and pop, tiny little or huge aggregate publicly traded companies, but it's still not the driver of the price of Bitcoin going forward. The price of the driver is how much liquidity companies like BlackRock, countries like the United States, Sweden, all of these, that's not on-chain liquidity, right? And so I don't worry about the technology failing. We're beyond that. That's the whole reason why all the big boys are jumping in the boat. There is no existential risk as it pertains to SHA 256 anymore, and there never will be. The only risk is for future miners. Like if you plan to be a Bitcoin miner and you are investing a lot of money into equipment that may prove to be obsolete in 2 years, you've got risk in the equipment, but you don't have risk in the production. You're really, at this point, it's a futile cause to try to go after the production value. There's already enough on the street to control the market. So why would we care about what's left, essentially?
Yeah, well, and I think the thing is, again, I like that you pointed out, that's the big boys are here because they're not concerned about these things. And I think that's that's a really important thing. If you're a retail trader, a retail investor, you have to remember that most of the way you're looking at the market in the world are through your eyes, through your experiences, through your specific level of wealth, income, experiences, whatnot, which is significantly different than what these big companies are doing that have all these PhDs and all these, financial maestros, in there, and economists and whatnot. Not saying that they're all going to be right, but when we're looking at something and we go, okay, well, that can't happen, or, that's not going to happen that way or something, most of the time we're going to be wrong on that. And we're going to be wrong on that because we don't look at it through their lens. We look at it through ours. But isn't that the same way it is with anything we do in life, right? I'm going to look at my particular position, wealth and financial wise, and your positions, and a lot of the retail that maybe tune into the show, they're going to be different views. They're going to look there if they're at a much lower position. They're not going to understand how we can be so positive about this thing and so not so worried about this thing, because they haven't been exposed to that. And of course we have our experiences, TradFi and all this other stuff. And so I think it's a really important point that you brought up that I think most people might end up glossing over, but they really need to think about it. Not just with Bitcoin, but just all these things in life.
The first example of this I saw firsthand as in my youth was the oil and gas market. It's the exact same thing, man. Think about how much reserve we have in the ground, right? So we control supply, and then we have built this massive market that has both retail and commercial aspects that need that product. Well, we're literally exactly where we are with Bitcoin, but we don't have the reserves in the ground of Bitcoin. There is no reserves. All the oil's on the surface. We're fighting over the same barrels, and they never go away. Yeah. That's akin to where I see the Bitcoin market being is the value of the market has already been extracted from the ground. There is a use case for both retail and commercial and institutional and governmental. And now we're seeing people accumulate supply, right? And use that supply to create more veracity in the market that they want to affect, right? If I own 1 million Bitcoin, if I'm BlackRock, what products can't I create?
Yeah.
What, I can literally infuse Bitcoin into real estate, into oil, into everything that I touch.
Yeah.
Just to change the asset class this much. And if you change the asset class this much, the question becomes, is that a larger delta of difference than any other differentiator that anyone else is offering? And I would argue that if you put a dash of Bitcoin on anything, it materially changes that asset class, and it materially makes it more attractive because it diversifies against the dollar risk that's inherent in every one of those asset classes. So it's like adding salt to your food. You don't ask whether you do it. You just figure out how much you want on it. You're putting salt on it.
Yeah, Bitcoin and where it has been, where it is, and where it's going. Tillman brings up oil and gas and what's gone on there. I'm reminded of a movie that walks you through the advent of oil being discovered here in the United States and then being mass produced. Right? It's the Daniel Day-Lewis movie. I forget what it's called, but it's the one where he's the oil guy. And he's out there with crews. People they're dying darn near every day, but they're discovering oil basically every week. On the West Coast. And Standard Oil back in the late 1800s, early 1900s, right? And so there was just a boom unlike we've ever seen that turned into the Industrial Revolution, yada yada yada, right? And then you move it to modern day, and there's a TV show called Landman that's out right now that talks about oil and gas production, and correctly describes what Tillman just said about there's it's a commodity. All the people that are in oil would probably like it to stay, and there's some commentary in the show about, hey, if it goes to to $200 dollars a barrel, that creates problems. If it goes to 20, that creates other problems. Best case scenario, it sits right around $78 a barrel. Everybody makes money. The current order stays in place. It's all just good stuff, right? So
listen, I would even go further and say that price movement in oil and gas are just chess moves on the board. They're people trying to push people out of, like, there have been times of flux where if you don't have storage capacity, you have to give away your oil or pay people to take it. And a lot of people made a lot of money knowing that and having storage available.
Right. So where are we in the timeline? Are we closer to There Will Be Blood, which is the name of that movie, or are we closer to Landman, which is
we're closer to There Will Be Blood right now? Yeah. It's about how do I accumulate the reserves that have come out of the ground so that I can create derivative products and create yield off of those reserves. And if I'm holding Bitcoin as a bank right now, like look at this, how much banking activity, what is a part of the oil industry? And do you really think the oil industry is so immature that like a big field is found and so the price goes down? No, it has nothing to do with that. It's all about paper. And so Bitcoin is in those early days where accumulation and you having the Bitcoin to leverage against your product that you create, and then the fees that are generated from the product and the liquidity that goes into them is going to be the separator. It's like if you can figure that mousetrap out, you're going to make a ton of money because you're the only game in town that has the Bitcoin reserves to create those products.
Yeah.
If you can't figure that out.
Yeah, I think the next 5 years of how the Bitcoin, economy matures is going to be really interesting, right?
Yeah.
So we're going to see some big mergers and acquisitions in the mining space. We're going to see Bitcoin as an economy grow, and some of those companies that are able to do that in a really unique and explosive way will become highly sought after companies. Will there be a world where companies that put Bitcoin on their balance sheet in a meaningful way skyrocket in value and price. And then those are the kind of companies that are more sought after than others in mergers and acquisitions. It's really going to be a remarkable time, right? No different again than the whole There Will Be Blood. There was a rush of companies that existed and were huge and grew really fast. And then over time, those companies consolidated, right? A bigger one bought a smaller one, or a smaller one rose up and then bought some other smaller ones and became a bigger one. Yada, yada, yada. The economy of scale matures. And what does that maturity look like for Bitcoin? I think over the next 3 to 4 years, we see a remarkable increase in the amount of publicly traded companies that hold Bitcoin on their balance sheet, which then makes them very interesting as acquisition targets for other companies, right? Yeah. The statement could be made that, do you have a unique technology that now makes you of interest to a bigger company? Well, maybe that unique technology is you've got 174,000 Bitcoin on your balance sheet, and so now you're a proxy in some way, shape, or form for a unique technology, which is Bitcoin. It's just going to be very, very interesting to watch. I think MicroStrategy and what they're doing is simply the tip of the iceberg, and it's going to be it's going to be fun. It's going to be interesting.
Yeah, I agree. And I think that's a big wake-up call to a lot of people who are maybe just coming into Bitcoin last year or this year, and they're going, oh my God, thinking, they've got such a short-term view of what's going on there that they're missing the forest for the trees, right? They're so focused on what's going to happen in the next 6 months or the next 12 months that they're missing what's going to happen in the next 5 years. Right. And the next thing you know, the next 5 years is going to happen. They're going to be, what the hell? I missed it. I could have been in it. I could have positioned myself for this, but I was so focused on tomorrow rather than 5 years from now, that because tomorrow comes all the time, right? And if you're focused on tomorrow, you're always focused in what's happening right then at that time. And it makes it really difficult to position yourself for the maybe the more the bigger movements, the more transformative things that happen. Yeah. And so again, Tillman had that great analogy. He's been talking about since the beginning of the year, which is Bitcoin prior to this year was all underground, right? It was all sub, and now since the ETFs came out, now it's all above ground. So it's a different growth. It's a different type of thing with different potential now than what we had. The only potential we had when Bitcoin was below surface was getting above surface.
Yeah.
Right. And so now it's all this other integration into the system and everything else that's going on there.
Well, so at Arch Public, we deal with clients and people that use our products, and we end up creating relationships with them and having conversations with them. We even have quarterly events that people show up to, and those are pretty awesome. Our concierge program members get access to those things. So those conversations are really interesting. So we end up having conversations where people are choosing to make investment decisions around Bitcoin. Like, not only do they hold spot Bitcoin, but then they hold some Bitcoin in their ETFs and maybe some tax advantaged accounts, but they also own some of the miners, and maybe they own a couple of other stocks like MicroStrategy and others that are holding Bitcoin on their balance sheet. By the way, Bitwise just registered for a new ETF that is going to invest in companies that have Bitcoin on their balance sheet. Yeah. I think it'll be interesting in the next 3 to 5 years what a portfolio like that looks like. Say that 50% of your portfolio is focused on spot Bitcoin, Bitcoin ETFs, companies with Bitcoin on their balance sheet, that type of a Bitcoin focused portfolio. I think it's going to be very interesting what that looks like. I think it'll be extraordinarily volatile because those Bitcoin adjacent companies could go all over the place, but at the same time, I don't think it's a wild thesis to think that there could be significant, merger and acquisition type of processes in the next 3 to 5 years that could really benefit people that hold those types of companies. Going to be very interesting to watch.
Yeah, well, we got one question here before we jump out of here. Freenode was wanting to know, so how can we identify and profit from these publicly traded companies as this matures? Any thoughts on that?
Yeah. So, listen, identifying profit is no different than, when a company stock moves from 15 to 75, you've got to decide whether or not you want to keep holding it or not, because that's an enormous return on your capital. So there's all kinds of analogies that you can make associated when NVIDIA went from $52 to $500. Should you have sold it? There's a lot of math that says, yeah, you should have, but then at the same time, it more than tripled in price from 500 to whatever the next one was until they split their stock. So same thing with MicroStrategy. MicroStrategy was $18 at some point, in the past, and it's not $18 anymore. It went to 400 and change. It's pulled back. So the question is not, when do I know when to cap? That's a personal choice on your end. You've got to decide what amount of money is meaningful to you in your life and your circumstances. But in my estimation, over the next 3 to 5 years, the Bitcoin economy is going to be a fairly profitable place to spend some time. And so, to what degree will it be profitable? Well, I'm not interested in percentages. I will say that I said in the early part of 2024, everybody was asking me, well, where do you think Bitcoin's going to be by the end of the year? And I said it'll be at 80K by the end of the year. I was wrong, but I was also right. Yeah. Because at that point, Bitcoin was anywhere between, $29 and $36 and $40,000, and so that was more than a double. But I think that's kind of the point, that if you have a 3 to 5 year time horizon, there's a pretty good chance that you're gonna, what's the history of Bitcoin? If you hold it for a 3 to 5 year period, for any 3 to 5 year period, and it's nearly 15-year life cycle, you've done extraordinarily well. My favorite analogy is, if you bought at the top of every previous cycle, you've made enormous amounts of money since then.
Yeah.
I'm going to lose you guys because I'm going through the canyon, but somebody reminded me in the chat. We did talk about a giveaway today. Chris, I don't know how you want to run it, but if you want to just pick somebody random in the comments that made a comment on the show, but just let me know, get me an address, and I'll send them something, surprise Bitcoin present for the holidays.
Oh, look at that. So now I'm on the spot to figure out how to do this.
Just pick somebody randomly that
and it can't be Fibbo. Fibbo isn't getting a gift. Fibbo's not getting a gift. No, we can't have it.
Let me see here. Is there some maybe I can just kind of randomly push this up and down and stop it somewhere real quick.
How about this? Anyone who retweets this show, the link, then we will pick someone from that list, and we will send you a gift. We may even pick a few people.
There you go. So you guys have today to retweet the show, wherever you're at, whether it's Twitter or Facebook or Twitch or wherever you're watching from, or X or whatever these platforms are called. You heard what Tillman said. Retweet the show. We'll check, tomorrow. So after the end of the day here, and then we'll reach out to you, and Tillman will do something.
Yep.
I'm not vouching for anything Tillman's going to do. I don't know.
Yeah, I already have a few gifts ready to go. They're all over $150 a piece. You'll enjoy them, and it'll give us something to talk about on the show, because some of them are technical and need a little explanation. So,
well, there you go. All right, so there you go, guys. Just wherever you're at, just retweet it, and we'll pick from that. But other than that, man, hey, listen, I appreciate you guys joining in today. It's January 1st. We had a hell of a 2024. I think we're going to have a firecracker of a 2025, though maybe people aren't feeling it at the moment. Santa Claus rally kind of fizzled. I think Rudolph got left behind or something, but You
We're
know,
closer to 2050 than we are to 2000.
there you go. Closer to 2050 than 2000. Oh, man, I hope I'm still alive in 2050, man. Anyway. So anyway, like I said, guys, hey, listen, get out there, follow these guys. Follow me, TXWest Capital on Twitter, X there. Andrew is AP_abacus, and Tillman is Texas OL61. Look at how proud he is when I say it correctly. Look at his face. You can't buy that kind of love and just respect and admiration.
It is. It really is.
And then, like we said, guys, retweet the show, and we'll go through it. You know, tomorrow we'll see. We'll just randomly pick a name out of those that retweeted it. And Tillman will.
By the way, Andrew, your audio is horrible in your new office. We need to get you a microphone or something. It's I need to hear that deep baritone voice in all of its glory, and not
I can just lean in like this.
It still sounds like your office is too big. Your new office is too big. We can only hear echo. It sounds like you're in a cathedral.
We'll figure it out. All right. We'll figure it out.
We'll get it done. Yeah, for those of you who don't know, Andrew's got a new office here. So, Tillman, be safe, buddy. Appreciate you joining in.
Thanks, man.
We'll see you and Andrew here next week. Man, so hopefully you guys will join us. There's about 1,000 of y'all watching, so hopefully you will join us again next week. We'd love to have you on there. Retweet the show. Follow us. Man, remember, the only thing you control is how much you lose. So whether it's trading or investing or whatever, if you go in with that understanding, you're bound to be a lot better off and a lot less upset with whatever happens. All right? All right, you guys have an amazing New Year.
Happy New Year.
Happy New Year, everybody.
Trade safe, and we will see you next week, Wednesday. Take care. See you later, guys.